Let's start with NVIDIA CFO Colette Kress, who just spoke at a webinar maybe about 2 hours ago and said new chip export restrictions won't have an immediate material impact to financial earnings given the strength of their products worldwide. That's pretty much the consensus from analysts as well, which is why we saw NVIDIA's share price really bounce back from earlier lows. NVIDIA's GPUs, we know, have been talking about, they're part of the AI high, and they're in such high demand that the company believes they would more than offset a drop from China. It seems like analysts are believing this too because the bull narrative continues with all of these notes. Even if China contributes, and this was said by the CFO, roughly 20 to 25% of total data center revenues. These restrictions, keep in mind, initially came into place October 7th, so that's what the left side of your screen right now, after which China retaliated, launching a review on Micron, and then actually banned some Micron chips just this past May. NVIDIA is now a target, and has since created a less capable, let's call it a workaround chip, which could now be a target of those controls. We still don't know because NVIDIA is not commenting. AMD, though, is a little different as their AI chip, the MI300, is just getting off the ground later this year. So the impact from the ban may be less, especially when you offset that from customers like Microsoft, Meta, and a new customer, AWS. The Department of Commerce, though, won't comment on any of this news right now, but my chip sources have told me previously that they were expecting further export controls this summer. So maybe that changes, maybe it doesn't. Should the U.S. tighten restrictions on AI chips further, demand and shipments to China, they're not going to disappear, as China is still using older models. They've been told to be stockpiling. But as NVIDIA CEO Jensen Huang warned just last month to the FT, the U.S. risks enormous damage to its tech sector, as it would encourage China to build its AI chips domestically.
Yeah, I mean, NVIDIA, and so they knew this was coming. I guess the H100 are the top of the line, but they had done the 800s just for China. But
so
now
that's that watered-down version, the H800.
Right.
So if you're doing I was literally doing some back of the math, napkin math, and it's estimated both of those chips, the higher one, H800 contributes roughly $1.5 billion in revenue. So if we're anticipating a 7% hit, roughly 7%, it would be about $105 million. But
for now, but it's growing so fast.
But we know NVIDIA has previously warned that when the first set of restrictions came in, it was going to be a $400 million impact in that quarter. Now, with the GPU demand, maybe they'll say it's a little bit less, maybe not necessarily the case, because China has been stockpiling and really anticipating this, so they've been buying.
And this could go beyond just chips. One other interesting angle that's been speculated on is whether there will actually be an effort to cut down access to Chinese players using cloud and those kind of AI services.
Which is a new angle, a new part to this, which would affect other players.
All the major tech players, potentially. I mean, I don't know if we've seen that yet, but, you know, if it's when there's smoke, there's fire with some of these moves, you know?
And the industry is very bad at forecasting the financial impact of these kinds of things.
Exactly, which is why if I'm, citing these analyst reports, it doesn't hold that much value just yet, because no one really knows, which is why you even saw that the dip in the stock, people are taking, processing this information, and then literally all of the 10 reports that came out, all bullish still.
Yeah.
It's like NVIDIA can't do any harm, which is fine, which is true.
But the shares are really even down today. I mean, it does tell you. Christina, thank you.